Time to turn our attention to the market and just where the opportunities are right now. Joining me in the studio to tell us what stocks he thinks we should be buying is David Buckland, CEO of Montgomery Investment Management. Good to see you, David.
Good to see you, Peter.
How's your running going?
Oh, pretty slowly.
Yeah, I was actually thinking, a lot of us old blokes who do running, we often feel the aches and pains. Sonny Bill Williams does 20 minutes worth of stretching as soon as he gets up. Yeah. Then 20 minutes before he starts at the gym and 20 minutes after. It's the stretching we're not doing.
Oh, we don't have time, Peter.
And neither of us look like Sonny Bill either. All right, so let's talk about, quickly before, I always talk about stocks because you and Roger sit down and try and analyse companies that you like and don't like.
Yeah, that's right.
The American thing. Is that affecting any of your judgments on stocks?
Not at this stage, but obviously if it goes on for a long period of time, it will start to become quite worrisome. I think the point was made on Tuesday night on your show, Peter, that in the September quarter of 2011, the Dow actually fell about 20 percentage points. And that was when the US debt was cut by S&P. Now, we haven't had anything like that at this stage, but the longer it goes on, the more worrisome it will become.
Yeah. In fact, Roger and I are actually doing a conference then, and I think he did make the point that it does actually create buying opportunity when the market overreacts, but still, I think we would prefer it not to happen.
We would prefer it not to happen.
Yeah, because I don't think he had a fun then. He was gardening then. Now he's got a fun.
Now he's got a fun.
Now he's got a fun. Now, what do you like at the moment then?
Well, look, let me give you some context. We launched the Montgomery Fund about 13.5 months ago, and it's up about 40 percentage points.
Yeah.
So,
by luck. Purely by luck.
Yeah, absolute luck, Peter. But the point is that when markets are so kind to you in such a short period of time, it is a lot more difficult than it was, 6 or 12 months ago. But in that context, the brief is, what do I like today? I'm going to give you two stocks today. One is G8 Education. The ASX code is GEM. They've had a stellar run. They've run up from about $1.35 to $3.35 in the last 12 months.
Now, what do they do?
Well, look, they're basically a mini ABC Learning Centre, but before you get excited,
before you
get excited, let me tell you, this is an extremely disciplined management. What they've been doing is they've been acquiring long daycare centres at no more than 4 times.
Any of the ex-ABCs?
EBIT, some of the ex-ABCs, but no more than 4 times EBIT, whereas ABC, towards the end of their glory days, were paying 10, 12, 14 times. These guys are exceptionally disciplined, and what they've also been doing is raising a lot of money to make sure their balance sheet is in superb order. So they're now actually
not carrying a lot of debt.
They're not carrying a lot of debt. They're now actually capitalised post the very recent capital raising. They're capitalised at about $1 billion, and we think in a few years' time they could make $70 or $80 million of bottom line profit. In fact,
remember, Eddie was okay before he started going overseas, wasn't it? The model wasn't bad in Australia in the early days.
The model was good in the early days, but what happened was there was massive indiscipline in that he paid 10, 12, 14 times EBIT, not 4 times EBIT, and also he didn't keep his balance sheet in superb order, which you need to do for roll-ups.
Yeah.
So
there'd be people listening wouldn't understand what roll-ups are.
Well, roll-ups are simply where an industry is extremely fragmented. So in this case, these guys own about 230 centres, which is only 4% of the market.
Jeez,
so there's
huge,
about
isn't it?
Yeah. So there's a massive opportunity, and the question is, will they end up one day with 8% of the market? But a roll-up is where an organisation comes in and says it's extraordinarily fragmented, and if we're very disciplined, what we can do is we can use our executive capacity. So let's just say you and I are in a room, and we can go and buy A, B, C and D and multiply it by 30 or 40 times, but we only need not 2 of us, but maybe 3 of us.
You're getting economies of scale right across it, and therefore you're doing better than the one-off person who has to have all those fixed costs and all that sort of stuff.
And you can do, bulk everything, right? Bookkeeping, and then what happens is you allow the teachers to teach because you're taking charge of a lot of the bureaucracy.
Systemising the frustrations out of a small business. Yep, understand.
Yeah. Okay. So it actually just had a capital raising very recently. It raised $80 million. It had demand for nearly $500 million. So what that's telling me is that there's a lot of money on the sidelines for opportunities, for good opportunities.
But David, because it's rolled up, the price has rolled up, it says to me that if someone buys in now, they might have to wait a while, but it's probably a good weight stock.
I think so. I just think the prospects are so good, and they're still very immature in their business model.
It reminds me of a company called Xero that has rocketed up since November, and I recently did a conference and I was staggered at how good the business looked.
Yeah.
But if you look at share price, it's about $13, something like that.
Yeah.
And it seems to me if you buy in now, you'll have to wait for about 2 or 3 more years of success before it kicks up again.
Well, in the Xero situation, I think there's enormous blue sky in the share price.
So that might take some time before we see it.
What's going to happen is it needs to be proven whether they can get this growth.
Yeah.
Because it's capitalised at, I think for memory, something like $1.4 billion, which I think is more than, theoretically MYOB and Reckon put together, yet it's a fraction of those two businesses in size.
But I'm seeing the industry, like the accountants and bookkeepers out there, they love that product.
That's right, but it will take a long time to transition.
Yeah.
That's right. Whereas in this case, it is a happening thing, and they are becoming, the leading player in the industry.
I really wish I was asked to MC their conference last year.
Yes.
I would have bought at $2 or $3.
That's always the case.
I would have told my viewers as well, so they missed out as well.
Yeah.
Okay, so that G8's the one. Is there anything else you want to say about G8 before we go to your next?
I think just it's now a $1 billion business. It's been extremely disciplined in its growth prospects, as I said, we think it could earn $70 or $80 million in a few years' time.
Okay, so it's one you could easily buy and sit on. Yeah, okay.
I think so.
What's the second one?
Well, the second one is a little business. It's called Big Air Group.
It's a little business is called
Big Air Group.
Okay,
so it's a telecommunications business, and it's only capitalised at about $146 million. Yeah. It's also had a good run. I think in the last year it's jumped from about roughly 50 cents to roughly 85 cents. So it's put on about 60% in the last year. But what this company's done, it's been very disciplined in putting basically very good microwave technology on the top of commercial buildings in high dense populated areas such as CBD, Sydney, Melbourne, etc., etc., etc. Right. And it's also acquired about 5 businesses in the last 18 months and starting to get very good economies of scale. So in fact its revenue line in the June 2013 half year was up well over 30% year on year. So it's got very good growth. It's got a decent balance sheet. It's got net cash in the bank. It's starting to get very good economies of scale. And in fact, I think it also is positioned for fast broadband provision in something like 35% of the rooms that are attached to universities. So where you send your kid down to college, and there might be hundreds and hundreds and hundreds of college rooms at the various universities around the country. I think they have something like 35% of the rooms linked in on some sort of annuity income stream.
Okay, so what is the actual business that they do? You talk about microwave, but normal people say, what is the actual business?
It's a fixed wireless network, so it provides broadband at NBN type pace and uses this sort of relatively good technology.
So you can carry my laptop anywhere, and I can link into this system, and I get internet access.
Or you can
that's
just
pretty popular.
Or you can just be in your building in Wallara, or in our case Piermont, and we can get it that way.
So they're going to be taking business off a lot of the big guys.
Yeah, but it's still a very modest business. So its revenue line might be $60 or $70 million on a per annum basis, growing at 30% a year. So it doesn't need much.
And what do you know about the management?
Oh, it's run by a chap named Jason Ashton, who seems like a good operator. He's been the sort of CEO behind that organisation for quite a few years now.
How do you make sure that these little guys don't cover up something? Because it's public companies are harder to cover up. How do you do it with little companies?
What, like Leighton?
Yes. Good point.
Well, look, obviously the risks go up the smaller the company, and what you're trying to do over time, it doesn't happen overnight. It's like any organisation, you're trying to build track record, and track record takes time, and you need to build credibility. And what happens is it's obviously based on things like revenue growth, but most importantly is the cash flow the company produces, because that's something very, very difficult to hide. Is the cash flow a business generates, as any small business operator knows.
Yeah, and do you actually analyse the calibre of the management really well, because some books can look good, but if you don't like the eyes of the managers, that can be a concern.
Well, that's crucial as well, particularly in the very small businesses. You've got to make sure that the senior management of the organisation are trustworthy and credible.
Okay, so it's G8 and Big Air.
They're there too, so one being $1 billion company and one being about $140 million company. So I would call them medium-sized and small.
All right, David, hope you're right. I always say that to Roger, so I'll say it to you as well. Thanks for joining us.
Thank you, Peter.